weekend all. Ira Epstein with your good weekend. Ira Epstein with your agriculture update, and this is your weekend edition for Friday, the 27th of March, 2020, getting on to 5 p.m. Central Time. Wow, what a week. I don't even know where to begin with the week. We saw reactions trying to say that things were getting better early on. Then we're getting into that pattern that as you get into the end of the week, the markets get nervous about the COVID, what's going to be said about it worldwide, not just the U.S., although we're becoming one of the epicenters now of the world for it. We saw Italy's cases rise yesterday. I'm hoping that they come back down. And we're seeing grain markets, which while they don't look like they did much today, it's been a pretty crazy week in that. When we take a look at a monthly chart of soybeans, you're just in a neutral zone. You've been hanging at the 18-month, that's what the red line is, 18-month moving average of closes. And again, this is a close-only chart, so I'm not looking for the highs and lows of the month. Just how did it finish up there? When I come to a weekly bar chart, you can almost see how the market has come down in a stepping ladder form. It made a run towards the 820 level. It got through some support at the 840 zone, didn't quite get back through the May lows, and came back up right now. When I put on the chart what's called a swing line, it measures when you look at the prior week, should a line be driven to the high of that week or the low? It's all taught in my charting course. Right now, you've got lower highs, lower lows. That's the definition of a downtrend. If the market hits 901 next week, that breaks the pattern. You then have a lower low and a higher high. So the number that I think the bears want to defend is not letting it get over that. And when I put onto the chart the 18-week moving average along with, if you will, this moving average of the 100-week, well, super interesting is the way to say what this is, because what the market has just done is it's made a decision to challenge key moving averages and see if can it get up through that number or not. This is your resistance point. You've come back into it. The support was tested over a series. Since the beginning of the year, as you kept hitting the lower Bollinger Band, you couldn't quite stay outside of it. 95% of the time, a market will trade within the black bands. You've got now, if you look at the financial markets, you've been crashing under them. You've had almost 4 or 5 weeks in a row of staying under them in certain markets. Very fascinating. You normally don't get to that 6th week, so it'll be interesting to see what it does. But you can see how you've come back up from there. The market in momentum, your downside momentum is ended. The market was pointing down, and you can see that right here. This turn last week where it came back into the band sort of neutralized that, and now you're back up into a key resistance area. As we take a look at meal, this to me has been a breakout market. Take a look at the sideways action that you had for an extremely long period of time. It really began back here last summer, and then it kept narrowing itself in. Now the market came back down, and this is the week of March 13th, so this isn't a long ago chart, had a breakout. What I like is the pattern of higher lows, higher highs. Again, you normally don't stay out of Bollinger Bands more than 5% of the time. My rule of thumb is I count each successive week that is outside of the band, taking away one of those 5 percentage points. So I've got 2 weeks in a row where you broke out of that. That's a breakout as far as I'm concerned. And on pullbacks, I think the pros will become buyers until the market takes out this important area of 290, 280. If that happened, you'd break the pattern of higher lows, higher highs. I don't on weekly charts look to see if you get overbought or oversold. Momentum's up, down, or neutral. On the soy oil, you kept riding the lower Bollinger Band over the past 5 weeks, 6 weeks. You're back up over it. That's not a trend change. This market still has momentum pointing down. Resistance is far away, though. It's at 29.21. You finished at 26.85, so I don't know where the market thinks it's going right here. It'll be interesting to see, but there's nothing bullish. You still have lower highs, lower lows. In the corn market, you're trying to get back into the Bollinger Bands. Now, you finished out last week under the band. You tried this week to get back over it, couldn't quite do it. Are we trending? No. You have the higher high, lower low pattern. I can see that you're trying to break out to the downside, but it's still not a trend. It could become one if we take out this week's low and stay under the band again, but that's what it would require. You want to talk crazy markets? This is one of the wild ones. You went from the upper Bollinger Band, came back, fought a battle at the 18-day average, made lower highs, lower lows. So the support comes in at the 100-day average, right down to the lower Bollinger Band. You get a spin and you come out of the downtrend. You can see that the market now has a higher high and a lower low. It's extremely rare that you just keep going to the upper Bollinger Band. That's exactly what it did. This market has moved in a 2-week period from 491.5 to this week's high of 587. That's almost $1 a bushel. Wild. There's reasons for it though. Russia's limiting exports, Ukraine's limiting exports of wheat. We're seeing countries that are being hit now by COVID-19 pulling in. They don't want food inflation, and they're saying, no, I'm going to hold on to what I have, and it makes U.S. wheat one of the bargains. As we take a look at sugar, what do you say when a market just drops 35% or so and you want to come in? I say don't. There's a point at which you've missed the boat, and that's all that I can say on that market. Coffee is a market that's got a lower low, higher high. Wow. Again, no trend. Whipping around the 18-week average of closes in the longer picture, very difficult to catch. You're not getting follow-throughs when you go up. You come back down, make a lower low. You just made that new high. If you can rally further, well, then I'll look for the 135 area. What's interesting is we see Europe shut down, the U.S. shut down, and yet coffee keeps moving up. It appears that the Asian markets are more important to the price right now, which are open in many cases than we are. In cotton, still you can see the problem here. This market just doesn't have any demand for it at this point. It's got now 2 weeks under the lower Bollinger Band. Right here we finished at 60.49. That was over it. So you're getting not yet super extreme, but you're certainly coming down with momentum down, breakout to the downside. I don't know how low is, but there's nothing bullish on that. Cattle's nuts. What do I say? You got down to 91 last week. This is a week later. You got up to 110. So you basically had an 18-cent rally straight on up, and then you finished this week near the lows. I've watched traders that have tried to catch this market, and I'm watching them get killed. Back and forth. Too difficult. In the hog market, whipsaw market too, but different action here. You held the lower Bollinger Band several times now, 2 to 3 right here and here. Now you make a high that took out a previous high. You've ended a downtrend. You're stuck between the 100-week and the 18-week average of closes, and now the battleground is which way next. Gets interesting. You know, if you're like me, in markets like this, you end up questioning yourself. I do. I do it each morning. I get up, what next is going to happen? In my typical day, I wake up 4:30 in the morning and I read. By 5:30 to 5:45, I'm recording a video for my subscribers. In that video, I am saying, buy here, sell there, do this. Here's what's going on fundamentally. Here's what I'm seeing on the charts. I cover 40 charts first thing in the morning. When I cover those charts for you, what I'm trying to do is give you technical analysis, telling you what I see going on one way or the other in the market with specific entry, exit, where I'm wrong, where I'm right. And you will see me wrong. It's a guarantee. I cover the markets in this exact sequence each and every time. And from that sequence, what I am trying to do is let you choose the areas you want to see. You can see them all. There's a slide bar at the bottom of that, and you just pull on it. We also give you, by the way, our phone app. So whether you have an Android or an Apple phone, it's not going to matter. You'll be able to see what we've got. It won't have the slide bar in that. Unfortunately, we do that on the website, but you get to see the whole video. How do you get this? Simply go to our website at www.iraepstein.com. Under the word research, it explains everything, and you can take it from there. I'm Ira. You have a good day.